So we're going to be doing EF4-26 from the book. This question basically is going to ask us to work with the worksheet and also do the closing entries, and after we've done the closing entries, put together the post-closing trial balance. So let's start with this requirement 1, which is to complete the worksheet. So what it's giving us is basically the adjusted trial balance, and it's asking us now to split this into the income statement and balance sheet columns of the worksheet. So it's pretty straightforward. You just have to know which accounts go into which financial statement. So we look at the list of accounts here, and we know that the income statement is revenues minus expenses. So we look to see where the revenues start. So this is it right here, and we have all our expense accounts here. So we're going to basically just transfer this section of our adjusted trial balance over to the income statement. So it's going to be 37,700, and then making sure that I put it on the credit for revenue, and then all of the expenses are debits. Okay, so now let's fill out this bottom part. So if we add up all the debits and all the credits, we get the following. Okay, so what do we see here? We see that our debits and credits are not equal, meaning that there is some net income or net loss that we're going to have to basically add into this worksheet. So what do we see here? We basically see our service revenue, which is our credit balance here, is less than our expenses. So just thinking in income statement terms, our expenses were more than our revenues. So this means that our business generated a loss, right? If you're bringing in less money than you're spending, then that is a net loss. So how do we enter this into our worksheet? We basically have to credit the income statement portion by the amount that will make the debits and credits equal to each other, which is actually equal to the net loss. So 12,150, if we add that here, so once we credit this income statement by 12,150, which is our net loss, our debits and credits equal each other. So this is a little atypical. Typically what we're going to see is that the credits exceed the debits, meaning that the business generates a profit. And in that case, we would have put the net income as a debit to get this equal to each other. But in this case, in this example, it's a net loss, so we had to put a credit into the net income or net loss row in order to get it to balance. Okay, so now it's asking us to do the balance sheet portion, and basically we're just going to take all these top accounts and transfer them over just like we did with the income statement. So, and again, we're being careful to make sure that we're putting the debits with the debits, debit, debit, and we'll put the credits in the credit column. So just be careful when you're transferring these numbers over. Okay, so we've transferred all these numbers over. And so when we add these up, this is a little weird. The column is a little out of alignment, so just be careful. We see the totals here, so the totals are going to go underneath this line. Okay, so again, we see that our balance sheet is not in balance between the debits and credits. So we see that we had this credit. We're going to have to basically debit the balance sheet by this amount. And basically what this is doing is taking the net income and essentially, it's taking the net loss in this case and rolling it into the balance sheet. Because as we know, retained earnings is going to reflect the net income for the period. So we're essentially doing that in the worksheet by taking the credit from this net loss here, and then we're debiting the balance sheet. So we check our answers. Okay. So this is just a little quirk of MyLab. I don't know why it's not lined up, so just be careful when you're transposing numbers. Okay, so now we're going to do the closing entries. Okay, and basically to assist us with the closing entries, I'm just going to pull up this graphic from the book because I think it's really helpful to step through exactly what we're doing here. So in this first closing entry, we're going to be closing revenue. So this corresponds to this green colored entry here where we have our revenues, which are a credit balance, and we're now going to be debiting the revenue account to close it and transferring the revenues to income summary via a credit to this income summary account. So basically what that looks like is we have service revenue and we have income summary, and we see here our service revenue is 37,700 credit. So to close that, to zero out our service revenue, we have to debit the account 37,700, and we move that to income summary. Okay. And so next we're going to close the expenses for the period. So how do we do that? Basically it's the opposite of what we just did with revenues. We have these debit balances for all of our expense accounts. So to zero them out, we'll basically have to credit the expenses and then debit income summary for those expenses to transfer the expenses to income summary and zero out the individual expense accounts. So let's see how we do that. So we know our debit is going to be income summary, but we don't know the amount yet. We're going to have to add up some numbers. So now we have a bunch of expense accounts. So we have supply expense, we have utility expense, salary, what else? Supplies, utilities, supplies, salary, rent. Okay, one thing to notice is that you have utilities payable and utilities expense, for example. Make sure you're closing utilities expense and not utilities payable. Utilities payable is a liability account and it's going to transfer over to the next period because you still owe whatever money's in here. You're not closing it out for the period. The expense account, though, you are closing out the expense account so that in the next period you can properly account for the expenses just in that period and not have an accumulating balance over periods. So just make sure you understand the difference. You're closing the expense accounts and not the liability payables. So let's start filling in the numbers. So we get our numbers from here, rent expense. And again, if you notice, our expense accounts again are debits. We're going to be crediting all of them by these amounts to basically get them to zero. So and so now we'll add up all of these credits and we will move all of them as a debit to income summary. So the total expenses are 49,000. Oh, let's see what we did wrong here. Okay, I see what happened. We actually forgot one expense, this depreciation expense. And I think that should do it. Okay. Okay, so now we've closed the expenses, we've closed revenue. Now we have this income summary account with our expenses and revenues. And so now we need to close income summary. So in this case, it's showing a net income, but as we saw here, our debits exceeded our credits. So actually, what we're going to have to do is we're going to have to credit income summary, as we kind of did in this example here, where we credited in the worksheet by the net loss. So let's do that. So again, we're going to have to credit income summary. This is again atypical. Traditionally, or more typically, there's going to be a net income. So in that case, you will be debiting income summary, like in this diagram here. You see here, this blue rectangle here is a debit. But in this case, since we have a net loss, in order to close income summary, we have to credit it. And so where is it going to go? We're going to basically credit net income, and that means we're going to have to debit retained earnings. So if you think about it just logically, retained earnings is all the profits that have been retained by the company. So if you have a net loss, this credit normal balance, we're going to have to debit in order to reduce it by our net loss. So that's why kind of logically it does make sense that we have to debit retained earnings by the net loss in order for the net loss to be reflected properly in the retained earnings. And so we saw here from our worksheet, it's 12,150. And again, we see how the worksheet is kind of linked because we are basically crediting the income statement and we're debiting the balance sheet. And so that's essentially what we're doing here. This income summary is containing all of our income statement accounts summarized, and the retained earnings is going on the balance sheet. So we're essentially doing exactly what we did here in the worksheet with this closing entry. Okay, and finally we have to close our dividends. So looking at our diagram again, our dividends are debit normal. So we will credit dividends and we will debit retained earnings. So dividends is going to be our credit account and retained earnings. And how much was our dividends? 28,000. Okay, so those are our closing entries. Okay, so now we have our post-close trial balance. And so essentially we're just going to have all of our balance sheet accounts and then the final the final retained earnings balance after we did all these closing entries. So let's quickly just transfer these over. So we have cash. And now we're going to do the liabilities. We did all the assets just now. And again, be careful with utilities payable versus utilities expense. You want to make sure that you're listing the liabilities on the post-closing trial balance and not the expense accounts. Because remember, we've closed those out through the closing entries. They all have zero balances. The liabilities, however, do have balances that we're going to carry forward to the next period. And now we're going to do the equity accounts, common stock, and retained earnings. So let's go fill these in. Remember, accumulated depreciation is a contra asset account, so it has a credit normal balance. And all the liabilities also going to have credit balances. And I'm getting these numbers just from up here, basically. So it's just a matter of moving this information for these balance sheet accounts down to this post-closing trial balance. So now this retained earnings, we're going to have to do a little calculation. So we look to our worksheet here. We see that our retained earnings is $55,690. So let's do a little spreadsheet here. This is kind of our starting. And so what happened? What did we do? Let's actually do it like this. We're going to do it as a T count. So this is retained earnings. So we see from our worksheet that it has a balance of $55,690 credit. So what did we do with our closing entries? Where did retained earnings come into play? So we had a debit here for this net loss of $12,150. So we're making sure we put it on the debit side. And then we also had another debit for dividends of $28,000 because, again, dividends, we're basically taking earnings from our business and distributing it to our shareholders. So that's going to reduce our retained earnings balance. So we have this. So now what is the balance? The sum of this is $40,000. So it's still going to be a credit balance. We still have positive retained earnings. So we have our credits minus our debits. And so it's 15,540 is going to be our ending balance here. And so when we add up our debits and our credits, it should balance. Okay, that's it.